everyone, it's Phil Bailey here, back from another episode of the London, Ontario Real Estate Podcast. This is episode 5, and we're nearing February of 2021. We're still in January right now while I'm recording this. Today, what I'm going to do is actually answer a question from a fellow Londoner that I received. If anyone has questions that they'd like me to go over on the podcast, please just send me an email. It's philbailey@roylepage.ca. If you have any questions about real estate in London, I'm always happy to answer them. And this is a question that I get quite often, and it is about what are the closing costs that I can maybe estimate getting into before I'm buying a home in London and area. So this will vary quite a bit. And it will really depend on one of the main things I always ask is, are you a first time home buyer or are you not a first time home buyer? That certainly impacts things. If you read most things online and from what I see from clients, most people are kind of in that 1.5%, maybe up to 3% of the purchase price. And I'm going to go through a few of those costs that people sometimes don't think about, and it's something that you certainly want to be ready for. I wouldn't recommend you push right to the end of your mortgage pre-approval or use all of your down payment up, because there will be some costs that you're going to face when you're buying property and properties exchanging hands in the province of Ontario where I work. So one of the big ones is, do be prepared if you would like to do a home inspection to pay the fee for the home inspection. I'd say you're likely in the $400 or $500 range most of the time, and it really depends on the size of the home, whether it's maybe a little bit less than that. If you're looking at a smaller townhouse, it might be a little bit less than obviously a large 3,000 square foot house, but do be prepared for a few $100 to do that. The other thing is that when you put an offer on in a property, so this week in London, everything's been still going pretty crazy. There's, I think, a few of the offers that I've been involved in this week have had 20 plus offers from people wishing to buy the home that my client also wished to buy, sometimes successfully and sometimes not. So one of the things that if you are successful, and you certainly want to be prepared for this before you make that offer, is that you want to have what's called a deposit ready to go. Typically, the deposit will be payable within 24 hours of someone accepting your offer. If you do write it that way, that's typically how I will write it that way in the offer itself. Recently, though, what I'm noticing is, for one, a larger deposit size. So typically, I would say 1% to 2% of the purchase price is probably pretty typical. I am seeing this going up a little bit. And honestly, I think this is coming from the market conditions that we're in and everything selling so quickly over ask, and also a lot of folks coming from out of town. And we want to make sure that those deposits are paid as quickly as possible, and that everyone is respecting that 24-hour rule, or it's actually sometimes paid as part of the offer. So like I said, there are some changes that are happening. I'm noticing it. One I'm noticing is larger deposit sizes. So on a $500,000 house or a $600,000 house, you might even notice something like a $15,000 to $20,000 deposit, where maybe before I would write those as maybe $10,000 deposits or even less sometimes, depending on the market. The other thing that you'll notice is that a lot of folks will want, or sellers or listing agents will want proof of that deposit prior to you making the offer or with your offer. So sometimes it's a photo of a bank draft. Sometimes it will actually be that you'll want to show that you have the funds available. Some other times, like I said, you can actually include the deposit as part of the offer. And that's something that I'm noticing is happening more and more. So just be prepared for that. It will come off your fees and your down payment at the end of the day. That deposit will be held in what's called a trust account by the listing agent. I don't think I need to get completely into that, but it is something that it's basically there to protect you, to make sure that money is not is still there when the home closes. So there's very specific rules that brokerages need to cover around this, and if they do not, obviously they're faced with some pretty massive issues they'll run into. So the money will be there until closing, and then typically the lawyer will tell you what the remaining is, and it'll be taken off your down payment. So another few things to consider: if you are putting really less than 20% down as a down payment, there will be what's called mortgage default insurance. One of the main providers of this that you've probably heard is CMHC. So it's not really something that is usually considered really a traditional closing cost, that it's actually added to the total mortgage you require, and that amount is actually going to be amortized over the life of your mortgage. Speaking with brokers, there's certainly differences in the percentage you put down and how much that cost will be. If you do have 20% down or more, you will not be paying that mortgage default insurance. If you have less, you will be, and I would certainly be asking for those costs in advance. Other things that are generally mandatory closing costs, things that you're going to have to think about. One is land transfer tax. So this is one reason why I always ask folks if they're first-time home buyers or not. Land transfer tax, there is a credit for this, not sometimes the entire amount, but for some of the amount if you're a first-time home buyer. If in the London market, you're going to want to be ready for this, because this can actually add up quite substantially for your cost. Other things, legal fees and what are called disbursements. I would ask the lawyer for what their rough fees are in advance of working with them. Ask them what their fee is, but then ask them what generally they're running into for a purchase of your size. As part of those legal costs, the lawyer will generally purchase what's called title insurance. So that's something, probably at least a couple $100, I believe, that's part of those legal costs. Again, I'm not a lawyer. I know I say that on most podcasts. Definitely not a lawyer, but someone that you want to be using as part of your arsenal when you're purchasing a home. One of the other things, if you are considering buying a condominium, is that I will always recommend that you review the status certificate prior to making an offer or as part of our offer. The status certificate includes all of the financials of the condominium. It also includes reserve fund studies, which will really determine if that condo has enough money in the bank and that if they're going to run into potential issues. One of the biggest concerns I have with condominiums is a rising condo fee that gets to some extraordinary measures. Sometimes I've seen them over $1,000 per month. The other one is what we call special assessments. So those are additional fees that you might have to pay if they run into almost like an emergency type situation. But I am seeing those paid for things like a new roof, new windows. I saw a building actually that ran into some issues when they were dealing with removing some windows, putting some new ones in. They ran into some asbestos issues, and I think that was costing owners at that time, this was several years ago, but I think it was costing them at least $4,000 or $5,000 per year in addition to their condominium fee. So we'll want to review that. To be honest, most lawyers, I think it's about $100, $200 to review something like that. I think it's one of the best spent monies that you'll be using to make sure that you're covering your butt if you do run into an issue around condo fees going up. Another thing you may run into is things like an appraisal fee. So sometimes you will have to do an appraisal on a property. I think that's about usually a few $100s. Don't quote me exactly on these, by the way, but I'm just kind of trying to give you some rough numbers. I think probably about $250, $350 in that range. Sometimes they're included and sometimes they're not. You want to ask that to the mortgage broker that you're working with or your lender. Another thing you'll want to have in place and be ready for that is your mortgage insurance. So it's usually paid in a monthly fashion, but sometimes they will want to make sure they have to make sure actually usually for the mortgage that's there in advance of you closing. So there's certainly a cost involved with setting that up. Also, if any of the utilities have been paid, you may have to reimburse some of the previous owner for anything that's been paid in advance. Usually those cutoffs are pretty tight, but there may be something that does come up. The other thing that is something I always usually get questions on is property taxes. So property taxes when you're closing in a home is it's really calculated as part of the home's value. There's going to be an assessed value on the home. You're going to get so you could have a home that's worth 500,000 with a much lower price in the market. Sorry, that's worth 500,000. That has a much different property tax bill than the same home that's worth 500,000. Typically, a newer build will be matched with what the price you actually paid for it is. A home that's, say, built in 1942 is probably going to have a property tax bill that's usually lower than really what the market value is of that home. So with property taxes and closing costs, what can happen is that, say, the current owner, the seller, actually paid their property taxes for the entire rest of the year, and you took possession after those property taxes were due. Well, you're certainly going to be owing some money back to that seller when you take over the ownership of that home. So it shouldn't be the entire property bill, because if you are closing on something later on in the year, though, there could be a few months left, and they may have already paid for those property taxes. The other side can happen with some of these things as well, where we do adjustments because something might be your responsibility that it should have already been really paid in advance of that close. So you certainly want to make sure you have a lawyer who's very astute in following all these things, which I'm sure you will. And all the lawyers that I've had an opportunity to work with in London recently understand this stuff far better than even I do, and they can give you a rundown on what is expected. These are the main things that you should be thinking about, but I would have some money set aside for those closing costs, because you don't want to run into an issue where you're perfectly matched out for your down payment, and then you run into, oh heck, I got to pay all of these extra things that I wasn't really aware of. So just be ready for that. I think the general rule of thumb, again, probably about 2 to 3% of that purchase price you should have available to you to make sure that you can pay for closing costs. I know that was a little technical today, but I hope that's helpful to some of you. If you have any very specific questions for me or anything I can help with at any time, just email me at philbailey@royallepage.ca, or you can just get in touch with me through mainly all the social medias, Facebook, Instagram, whatever you see fit. I hope everyone has a great rest of January, and as we get through COVID and this lockdown together that we're all going through, I know brighter things are ahead for all of us, and hopefully we can all get out and do this in a safe fashion when this all comes to an end. Thanks so much for listening, and I hope everyone has a great day. Talk to you soon.